moving on, we've already touched a little on the regulatory side, but I'll now give a bit more emphasis to the regulatory side here in a Reg D offering. Every investor must have a know your customer step done, which we do on our investing back end. There has to be an anti-money laundering check to make sure that each investor is not on the federal bad actor list in any way, shape or form. And in a 506c, which is really the only viable way to advertise broadly a Reg D offering, in a 506c, they must verify their accredited status. So we integrate that into our back-end payment processing system, and they have to complete that step. So those things must be done in an online Reg D offering. The private placement memorandum is a requirement. The SEC requires professional disclosures, and you, as a leader of your company, want professional disclosures because you want to minimize the risk of future litigation. You want to disclose everything that matters so the investors are well informed. Let me see if that's urgent. No, it isn't. Okay, risk factors I mentioned, got to be comprehensive because we live in a litigious society, and we want to thoroughly inform investors so they know what they're getting into. There should be no secrets. Having a transfer agent is not a requirement, but it's a heck of a lot easier when you do use a transfer agent. And believe you me, they do a lot of work. They earn their keep. They don't charge much money for their services. They provide legitimacy to the offering. They provide an online account access for your investors to check in and see the state of play. And if you've raised the share price, the security price since they invested, that will be reflected. The current raised price will be reflected as the value of their security in their transfer agent account. That's great stuff. But most importantly, for many companies who have only raised money through Reg D in the past from angels or other wealthy investors like VCs, they may have had 4, 6, 8, 15 investors. The idea of dealing with hundreds of investors is pretty intimidating. And the transfer agent does the logistics of that stuff. You know, somebody's transferring their investment from their personal name into their family trust. They deal with the transfer agent to do that. You're paying dividends. You can have the transfer agent distribute those dividends in a cost-effective manner. They take a lot of the work off your plate. Regulatory-wise, I mentioned, if you exceed 2,000 accredited investors in your Reg D, then in your company through offering money through Reg D, then when you reach certain size levels, I think 75 million in revenues, 50 million in float, I think is the right number. Double check on that. We have that listed on our website in a FAQ. Then if you were to exceed those numbers, then you need to produce expensive audits every quarter going forward. So you want to avoid that in any reasonable way. But of course, 2,000 accredited investors is a hell of a lot of investors when they're putting in sizable amounts of money each. And, you know, liquidity for these accredited investors is limited. Theoretically, an accredited investor is allowed to immediately sell their stock in your company to another accredited investor day one, but only with a cooperative securities attorney letter telling them that that's the state, validating that. It's more normal to do accredited to accredited investors at the 6-month point, and technically an accredited investor can sell to any investor at the 12-month point after making their investment, unless you put a lockup on them. So those are the principal regulatory issues around Reg D offerings, along with a couple other minor ones or other ones that I mentioned already.